Welcome to episode 5 of our free Forex trading series. In our previous episode, I explained everything you need to know about Forex charts, how to read a Forex chart and time frames as a beginner. And as promised, in today's lesson, I'll be teaching you technical and fundamental analysis. Wait, don't go yet. This is the lesson that will show you how to make money as a Forex trader. But you have to watch this video to the end in order to fully understand. Get a jotter and a pen if you have to. Jot things down so you can take things out. In Forex trading, the word technical analysis is very broad, but I will try and simplify it as much as possible. Technical analysis is the foundation and bedrock of most Forex traders. If you have a friend, an acquaintance, or a neighbor that trades Forex, or you must have come across a random Forex content creator online, you must have seen them drawing different weird lines on their charts up and down and giving them different weird names. Well, don't panic. That's technical analysis. Actually, there are many tools used in technical analysis, but we'll be discussing some of the most commonly used ones, which you will start using by the end of this video. So work with me. Technical analysis is basically when Forex traders uses different technical tools made available to them by their chart provider like TradingView to analyze historical or past price movements in order to predict future price movements. We will be looking at trend line, horizontal line, short position, long position, rectangle tool, and the path tool. Straight to your TradingView. Let's see what these tools looks like and what they are used for. First and foremost, click the pencil button at the bottom of your chart here. Scroll up, you see under trend lines, you see trend line. So click trend line. So trend line basically is a very flexible tool and it's used mostly in a trending market. It can go like this, or however. Then the next on the list is the horizontal line. Click on that pencil icon again. Then under trend line, you scroll to the right, you see horizontal line. You click on it. Horizontal line, we all know vertical and horizontal line is like a straight line and it's very, very long. You can see here, and it's used mainly to mark out areas like support and resistance areas. So let's clear that. The next is the rectangle tool. Click on the pencil icon again, then scroll up. You see under geometric shapes, you see rectangle. Click on the rectangle. You can see it's used to mark out areas or zones where you expect price to get to. You can see I customize it to green. You can also customize it to whatever color that you want. So that's for that. Then we have the short and the long position. Click the pencil icon again, scroll down. Then you can see forecasting and measurement. You can see long position and short position. You click on the long position. This is one of the most popular tools in Forex trading because you always see it on charts. You can see like this, you see traders doing like this. Basically, this tool is used for risk to reward ratio. Know where your stop loss will be, where your take profit will be, and where your entry will be. And the next is the short position. Basically, the long position is for buy setups, while the short position is for sell setups. So let's take a look at the short position. You can see the green is on the downside, while the red is on the upside. Also, you can customize this to whatever color you want, but naturally people use red and green because red signifies danger, which is stop loss, and green signifies go, which is take profit. And the last but not the least is the path tool. Click on this pencil icon again, scroll up. You see under still under geometric shapes, you scroll on to the right, you see the path tool. You click on path. The path tool is a very flexible tool that you can use it however you want. You can see you can use it to form different shapes, different direction, however you want. Like basically we use it to point out things or point out directions that we are predicting the market to go. You can see. So basically that's that for the different tools. So now that you're familiar with some of the most commonly used tools for technical analysis, let's dive deeper. Under technical analysis, we'll be looking at support and resistance, trend lines, channels, and introduction to indicators. For support and resistance, just like their name implies, support is like a base or platform where price can bounce on and reject back to the upside, whereas resistance on the other hand is like the opposite of support. It's like a ceiling or roof where price can bounce and reject back to the downside. Now back to your trading view. So in order to identify a strong support and resistance levels, you have to zoom in, or let's just flip. If you're using your phone, you can flip your phone, turn your phone around like this to have a clearer view. Then you zoom in, then look for the highest point at the market currently, the highest point and the lowest point currently. So here, then you take the horizontal tool which I showed you before. Look at the highest points. These are the highest points in the market. You place it here. Then let's look at the lowest points. You pick. These are the lowest points in the market currently. So we place it here. Now you can see we have two lines here, one up, one down. You can see one is acting like the base of the support, while the other one is acting like the ceiling or the roof, which is the resistance. So now you can see whenever price gets to your support here, support level, which is the base, it bounces back to the upside. And whenever price gets to your resistance level, it bounces back to the downside. So now basically as a trader, this is what you do. Once you spot support and resistance levels like this, you wait patiently for price to get to your resistance level or your support level. If it gets to your resistance, which is the upside here, you can sell. You sell from the upside to the downside and make profit from it. If price gets to the support level, you buy. You buy from the downside back to the upside and make profit from it. And one thing you need to note, for a support or resistance to be considered valid and strong, it must have been retested at least twice without being broken. So you have to have that at the back of your mind. For trend lines and trend channels, I believe you already know what trend lines are, but when and how you use a trend line. As for trend lines is used mostly when the market is trending. When the market is trending, we mean by either the market is in an uptrend or a downtrend like this. Unlike support and resistance, they use them when the market is consolidating. So like this, you can see this market is in an uptrend. So what you do is you pick your trend line here, which I've already showed you. You mark from the lowest point of the trend, which is here, then drag it and make sure it touches some certain key levels on the trend. While dragging it, you can see like this. You can see that the trend line touched the lowest point here, touched some levels here, here, and here. So now, trend line also acts like a support or a resistance as well, but in a diagonal format. So you can see whenever price comes back and retest the trend line, you see it bounces back to the upside, come back and retest, it bounces back. So, and also just like support and resistance, for a trend line to be valid, it has to have been tested at least twice without being broken. That's when you say, okay, this trend line is a valid trend line, which in this case you can see it was tested 1, 2, 3, 4, about 5 times. So then also you can also draw trend line above to make it like a resistance like this. You start from here, the lowest point as well, take it here, allow it to touch some key levels, then you get it here. Now you can see, if you check this thing now, you notice something. We now have something like a support and a resistance, but in a diagonal format. Now the space in between them, from this other trend line to this other trend line, is what you call the trend channel. A channel is just like a drainage or a gutter. So the space in between them is called a channel. So you can see once price bounces from this support trend line and gets to the resistance trend line, it bounces back and forth like that. So as a trader, what you do, once you spot a trending market and you draw your trend line below or above, once price bounces from your trend line, you can sell from resistance trend line, and once it bounces on the support trend line, you can buy and you make profit from it. So basically, that's how trend line and trend channels are traded. A trend channel, on the other hand, is when two trend lines are used simultaneously on the upside and downside of a trending market in order to form a diagonal support and resistance. The space in between them is called a trend channel. Let's quickly look at indicators, or call it introduction to indicators. Indicators are tools traders use to analyze price movements and volume in order to identify trends as well as potential entry and exit points. We will be discussing two effective indicators that I have used personally, and that is the moving average and relative strength index. There are two types of moving average: the simple moving average and the exponential moving average. Simple moving average uses the average closing price over a specific period to provide smooth lines that helps identify trends, whereas exponential moving average focuses on recent prices, which makes it more responsive to new information. Relative strength index measures the speed and change of price movements on a scale of 0 to 100. A relative strength index of 70 and above is considered as an overbought, while a relative strength index of 30 and below is considered as an oversold. Basically, relative strength index is used by traders to mark out potential reversal zones. Now you understand what technical analysis is all about. Let's take a look at fundamental analysis. While technical analysis focuses on what's happening on the chart, fundamental analysis, on the other hand, focuses on real-life events, economic and government policies. Recall, in episode 1 of this series, I told you guys to download some apps you need as a forex trader, which investing.com was one of them. So now, open your investing.com. Let me show you how to identify important economic events that can impact the market either positively or negatively. This is investing.com. To check for economic news on this app, you click on the more button at the bottom right corner there, then scroll up, you see calendars. Click on calendar. You can see showing today, no events to show because today is a Saturday. Market only opens from Mondays to Fridays. So let's take a look at next week. Is CPI next week Wednesday, so let's take a look at next week. Click on next week here. Now if you check, these are all the news for next week. You can see Monday, August 12th. These are all the news for next week, but there's something you should take note of. Look by the side of each of these news. Like for instance, the second one there is showing AUD. That's Australian dollar. That's the news for Australian dollar. Look by the left side where they write the time 2:30. You see something that is like a bullhorn. There are 3, but you can see only 2 is colored white. So that thing is used to measure the impact of a particular news. If it's colored just 1, it means the news has no impact. If it's colored 2, like this one is colored 2 white now, it means it has a very a middle or like a moderate impact. Then if it colors 3, it means that it's a high impact news. So now let's check for CPI. CPI is on a Wednesday. That's the Monday news. This is Tuesday. Let's check. This is Wednesday. So it's usually by 1:30. So let's check. Yeah, okay, you can see USD CPI MOM bracket July. CPI means core price index, and it's a news for United States dollars or for United States, but it mainly affects the United States dollars. Yeah, as you can see, USD. So each news is specific for a particular currency, so it can only affect that particular currency and the pair that currency belongs to. For instance, CPI is for USD, so if there is GBP USD, that news will affect GBP USD, USD JPY, Euro USD, and every USD pairs. So now let's click on CPI. Now we click on CPI. As you can see, you see where there they write importance. You see the 3 bullhorn, they are all colored. All the 3 bulls are all colored. That means it's a very high impact news. Let's read it here. You can see the consumer price index, blah blah blah. You can see a higher than expected reading should be taken as positive for the USD, while a lower than expected reading should be taken as negative. What I'm trying to say is that if the outcome of this news is higher than the forecast, which is this 0.1 here, it means that it's positive for USD, which means USD will gain strength. But if it is lower, that means negative for USD, which means USD will lose strength. You understand? So from this information here, you can easily decide what to trade in the market based on your own analysis. So basically that's that for economic calendars. I hope you learned something new. Like and share this video. If you have any questions, drop them in the comments. Make sure to subscribe to this channel and turn on post notifications so you don't miss any of the new episodes when they drop. Bye for now.